In this video, guys, we're going to look at why do some brokers frown upon scalping. Stay tuned. Hey traders, a very warm welcome to you. So, why do some brokers frown upon scalping? Well, the first question that people actually ask is scalping illegal? No, it's not illegal. You can trade in whatever time frame you like. If you're buying and selling, let's say we're trading, let's look at two different scenarios. So spread bet, you buy and you sell, you can do that all day long. From a legal perspective, it's absolutely fine. There's no legislation that says that you should hold your trade for a certain period of time. Same with CFD, same with the futures contract, same with the stock, it doesn't matter. Now, there are certain things you can't do which are outside of scalping, i.e. you can't trade against yourself in other accounts. So you can't kind of put a bid in one account and then trade against that. You wouldn't do that anyway, but you can't kind of do that kind of stuff. There's stuff that you wouldn't want to do and you can't do, and that is illegal. But if we look back on from a scalping perspective, you can buy and sell, sell and buy, and do all the stuff you want to as many times as you want. There's nothing against the law that says that, well, at least that I'm aware of in the main countries like US, UK, EU, probably Asia. Perhaps it's different in other countries, I don't know, but I doubt it. At the end of the day, most of the time, people are benefiting from it. If you think about if you're going into the exchange, right, and you're trading ABC stock, right, and the bid is sitting there at, so let's say 05, and the ask is sitting there at 06. If you sell and buy all day long, the commission is going to get racked up. The exchange is going to make their exchange fee, the broker is going to make their fee. It's going to be great. Now, if you're buying at 6 and selling at 5, you're going to be losing money. But let's say you're bidding at 5 and getting filled and selling at 6. That's great as well because you're making money, and even variations of that. So that's fine. Now, why do some brokers frown upon it? So the brokers that you're allowed to trade direct access do not care because their model is based on commissions from you, right? So if you're buying and selling 5 and 6, whether you're putting orders in the book on a stock or a futures contract or whatever, they don't care. As long as you're not doing anything illegal like trading against yourself or spoofing or any of these kind of stuff, they're happy for you to trade as much as you like because the more you trade, the more commissions they get. Every time you trade, they're going to get a chunk of that trade size. The exchange is going to get a chunk. Everyone is happy. So if you're trading directly on the exchange, scalping, brokers love it. Now the issue is some brokers frown upon it when you're trading with a broker who isn't direct access, i.e. they're not making their money from commissions per se, i.e. they're not a middleman between you and the exchange. In this example, when you're trading, let's say a spread bet or a CFD or a spot provider or one of those other brokers, you're trading technically against them. Now, we've done a video on this before. We talked about how these guys make money, so we're not going to kind of go into that much detail, but ultimately what they want to do is they're trying to get an even number of buyers and sellers across kind of instruments that are relatively similar or relatively correlated and make the spread in between that. That's the ideal scenario for them. They want to have this chunk of buyers, like there's people along FTSE, people on this, people on that, these people are short, they make the spread in the middle. Now, sometimes that goes out of sync and they might have to hedge some of that in the market. They're going to take on a little bit of risk because we know that majority of retail traders are losing money anyway, so they're generally happy to take a little bit of risk on. This is a traditional model, by the way. They take a little bit of risk on. When it gets a bit extreme, they might then kind of counteract that by hedging themselves off in the market. Now, that's the issue they have generally with people who are scalping, is that they can't hedge your exposure. Okay, if you come along and you buy any massive size in a market, if that skews them out of exposure, they can go away and they can hedge that net exposure or shuffle around to make sure they're not overexposed. If you are scalping and you're in, then you're out, then their exposure is doing this, is doing this, is doing this, and you may not be you alone causing that. You might be scalping a small amount, but if there's a lot of people doing that, and maybe the spreads are very, very tight, maybe they are kind of promotional spreads, like very super tight spreads, they're not really making any money on that, then all that kind of constant trading generally could mean that they could be caught on the one side or the other. So there is that aspect. You know, they don't want to be caught, they can't hedge the risk. And if you're trying to trade very, very quickly and you're trading in some size as well, it leaves them potentially exposed. They don't generally like it. And that's not always the case, because some brokers are more than happy for you to scalp because they've got the infrastructure in place. They're big enough to be able to stomach that. They know that the commission they're making, or the spread they're making, probably makes up for it somewhere along the line. And a lot of brokers are more than happy with that. And so your bigger ones, you're okay. Smaller ones might start putting the brakes on it. And the other thing which they want to be careful of is that you're not really trading against a stale price. So sometimes you might have a price that hasn't updated due to kind of outdated software or some sort of feed issue that doesn't block you from trading it. And some people might trade on a price that's a little bit late, a little bit erroneous, and might get a little bit of a head start on that. And so if someone's trading very, very regularly on that, then they might say, well, very regularly, as in frequently trading, they might say, well, are they taking advantage of something that's not quite right with our software? Is it that, or is it the other? And they're just cautious that that might be the issue. So that's one thing, guys. Brokers frown upon it because of the hedging, and they frown upon it because they might not have the control they want over the price they're offering. If they're offering and changing prices regularly, if there's some kind of issue with the feed, or if there's something that the price doesn't update quick enough and people are scalping, then they do leave themselves vulnerable for the odd person getting a price that's not really available. Now, that's not the end of the world when you're talking about someone who's swing trading over a day or a few hours, or even day trading even. It's not a big deal, is it? Because you might make a little bit coming in, they might lose a bit coming out. Not a problem. If someone's scalping very aggressively, then there's potential then to kind of get a significant edge from that. So those are the things, guys. Scalping is not illegal. Some brokers do frown upon it. The bigger brokers generally won't, as long as you're not really superly aggressive or kind of taking advantage of something you shouldn't be. And if you're trading directly in the exchange, more than likely absolutely fine, because they're making the commissions. Anyway, take care, guys. Bye-bye.